So you can call me Will. Basically, I look after the treasury and the OTC trading for Zerocap. You might have heard of us recently through media outlets. Basically, Zerocap is a Melbourne-based company. We're literally a cryptocurrency investment bank and asset management company. We are kind of well known recently because of our collaboration with ANZ Bank on generating the world's first ecosystem for bank-based stablecoin and real-world usage of that stablecoin in order to create a Aussie dollar digital currency conversion into USDC, and then using that to purchase tokenized carbon credit and moving along the ESG to save the planet. All Melbourne companies, basically. We've got Beta Carbon here today. We've got ANZ, obviously, is headquartered, a world institution based in Melbourne, and so is Zerocap.
Will.
Yield, return on investments, probably the most important element in day-to-day life of Zerocap. Because what we do is continuously looking at correlation between the real asset world or the traditional asset world, fixed income, equities, property, venture capital, versus the crypto space. How we could help investors, family offices, high net worth clients, institutions, migrate some of the portfolio allocation into the crypto space. What do we actually look at the correlations, and how do we enhance the portfolio without increasing beta, without the element of ultimate credit risk? Of course, there's always going to be market risk, right? And people go into this portfolio allocation, most of them understands there is element of volatility, there is market risk associated to it. But how do we actually measure the market risk respective to the return on investment in a portfolio allocation that allows that increment without reducing or increasing the overall delta risk of the whole portfolio? So yield to us, it's almost bread and butter. Every day we're harnessing volatility, we're trying to move, take out the credit risk associated with the crypto space, counterparty risk, et cetera, and how do we actually net down and filter out and reduce it to the point that we could recommend to our clients? This is quite interesting because I was just listening to both Matt and Peter, and I was thinking, wow, this is, that's something we've been developing in-house for a long time. So basically, we've got a research team and a credit analytical team within the house. And the research team looks at historical macroeconomic information, blockchain data, et cetera. We analyze it and put it in a big picture, basically. And we try to forecast how the portfolio investment climate will actually evolve. Our credit analysis team, it's probably more related to your second, the question you just mentioned, is that we've actually tried to replicate a Moody's and S&P credit agency in-house. I don't think there's too many that's attempted this explicitly, but personally, I used to be a credit portfolio manager, and every day I come into the space, I look at ratings, I look at jump to default ratios, I look at CSO1s and all those things, and I've noticed none of that actually matter in the crypto space so far. No one's been looking at it. No one's looking at counterparty risk. No one's looking at counterparty leverage, the use of funds, anything like that, right? It's like 30% yield, that looks good. Here's the money. But we've been a bit more conservative. We've been a bit more stringent on how we actually look at client funds, how we actually look at portfolios, and how we look at the lending space. Now, I would say that in cryptocurrency asset management for the last 3 months, market risk is no longer the topic, right? It's credit risk. Because most of these altcoins has dropped 80%, right? If you believe in the protocol, you've done your DD, what does market risk matter, right? You allocate 2% of your capital into it. So what if it goes down under 50, right? If it's long-term investment, if you're into a VC, that's beautiful entry. But can you get your money back? That's the issue, right? All these big topics coming out, $10 billion hedge funds, suddenly put down a draw gate, and you're going, whoa, draw gate, hedge fund, 2009, all over again. What happened?
It's return off capital, not return on capital.
We should talk afterwards. That's wrong. But there was one interesting fact that in May this year, for the very first time in the history of cryptocurrency, we saw that an event risk came from the crypto space and moved the entire S&P NASDAQ. Right? During the terrorist collapse, basically shocked the entire world of asset management. And I've never seen that before. Right? And I believe that it shows the world crypto matters. And it's not going away.
No, that's very true.
Okay, so even with recent retracement in asset markets, there's still roughly about $80 trillion in the world of equity investment. That's over $100 trillion in fixed income. So basically, crypto space is only $1 trillion at the moment, market cap, right, roughly, very small relatively. But we are offering a lot of opportunities with this space, as long as you can mitigate and done the right DD on credit risk, right? For example, if you look at the volatility on the S&P 500, VIX is still trading at extremely low level relative to anything that could be offered on the crypto space. But in order to mitigate through the counterparty, we can actually push past basic borrowing and lending or leverageness. We can look at the optionality, derivatives, structured products, and all the harnessing of volatility, which could generate a yield without the full impact of counterparty risk. Now, some of these derivatives and opportunities are only offered for institutional and well-known insiders. And that's where Zerocap comes in. We're basically offering all these products, and we've done the homework for you, right? We're saying that, we've gone through the credit assessments, we've done the market assessments, and we're saying that this is the risk, this is the opportunity, and this is what you need to do. Come through the journey with us, and we'll hold your hand through the new world.